This is a video demonstration on how to calculate the weighted average cost, also referred to as WAC, in a periodic inventory system. We will be doing question P613b from the textbook. The difference between the periodic and perpetual inventory system is that during periodic, your inventory account is updated at the end of the period, while in perpetual, the inventory account and cost of goods sold are continuously updated. The advantage to having a periodic inventory system is that if you're a merchandiser that sells a lot of inventory, it may be difficult to account for every item sold on a daily basis. The weighted average method is used to assign the average cost of production to a product. WAC is commonly used in situations when inventory items are so combined that it is impossible to assign a specific cost to an individual unit, when the accounting system is not sufficiently sophisticated to track FIFO or LIFO, or inventory items are so commoditized that there is no way to assign a cost to an individual unit. Now that we have a background on the method that we will be using, let's take a look at the question. Una Company opened a new store in February this year. During the first year of operations, the company made the following purchases and sales. When looking at the table of data given, we can see under the purchase transactions that it says cost per unit. This is different than price per unit that is under the sales transactions. Cost per unit is the price the company is paying for the inventory for each unit purchased during that specific transaction. Price per unit is the price the company is selling the inventory for each unit that is sold during that specific transaction. I say specific transaction because, as we can look at the table, to cost per unit and price per unit varies depending on the date of the transaction. Since Una Company opened this year in February, they are starting with no beginning inventory. So when the first purchase is made on February 7th, there are only 20 units of inventory on hand at that moment in time. So the first thing I'm going to do is make a summary chart of the information given that we will be using to calculate WAC. For this method, I'm going to create a column called description. This is just where I'm going to specify if it is a sale or purchase transaction. I am also going to copy the data from the purchases given at the start of the question into my columns down here. As you can see, the data we're putting in is the exact same as the information given above. The first thing we want to do is calculate the total number of inventory units purchased through the fiscal period. So how we're going to do this is we're going to add up everything in the units column that we just made. So we're going to use the formula, the sum equals, and drag our cursor from C15 to C18 and just add them up. So we're going to get 105 units. The next thing we want to calculate is the cost of all purchased inventory. This is different than the number we just calculated. In order to find the total cost, we have to find the cost of each individual purchase, as the number of units and cost per unit is different for each transaction. How we do this is we are going to multiply the number of units by the cost per unit in the next column. We are going to do this for all 4 purchases. In order to get the total, we are going to add up the column using the same formula, equals sum, and we should get a total of 13,650. Our next step is to find the number of units left. How we do this is we take the total number of units and subtract the total number of units sold. So in this case, we are going to be subtracting the 35 and 50 from the 105, and this will give us a remainder of 20 units. What this means is that at the end of the first year of operations, once all purchases and sales take place, we are left with 20 units on hand. The next step is to calculate the cost of these units. This is where the weighted average comes in, because we are finding the weighted average cost per unit. The formula that we use to find this number is the total cost of the purchase inventory divided by the total number of inventory units from the purchases. In order to find the cost of the ending inventory remaining, we simply multiply the number of units left by the weighted average cost per unit. There is one last thing we need to do before we finish this question, and that is to find the cost of goods sold. In this case, it is very easy to calculate. We take the cost of all purchased inventory and subtract the ending inventory to get the cost of goods sold. Now you are a pro at using weighted average cost in a periodic system. Thanks for watching!